My guest today is a full-time, very charismatic cypherpunk. In his spare time, he's the CEO of Agoric, a protocol that will allow developers to create composable smart contracts with JavaScript, which went live with its public mainnet on November 1st. From 1994 until 2003, he was the CTO for Agoric, where he co-architected the brokerage information system for Schwab's active traders and the e-check system carrying billions of dollars for Deluxe and Verify Valid. He spent more than 9 years as a principal architect at Microsoft, where he worked on incubating new technologies for future operating systems like Midori. Dean, welcome to the Stakeborg DAO Talks.
Thank you.
Quick disclosure before we start, I want to say that our staking as a service division, Stakeborg Labs, participated at the incentivized testnet. Cool. So, Dean, I know that Agoric chief scientist Mark Miller was a Google research scientist and wrote Agoric open system papers back in 1988. You started to explore smart contracts in 1989. That's basically before I was born. I heard Mark Miller saying we were cypherpunks and we wanted to bring a much deeper cypherpunk flavor to the smart contract foundation. What was a smart contract before the blockchain era and how were those early times?
Sure. So smart contracts from our perspective were almost the same as they are now. A smart contract is where software is enforcing the terms of a contract-like arrangement between third parties. So eBay, PayPal, Venmo, Airbnb, Uber, Lyft, all of those are smart contract businesses where they only succeed because thousands and thousands of transactions happen with no human intervening, including occasional dispute resolution that, again, doesn't have people involved. And it operates in a fair fashion across a broad number of transactions in a broad number of circumstances. And all of those are smart contract businesses with a trusted intermediary operating the smart contract. What blockchain brings to that, so that predated blockchain is a $1 trillion market cap by itself, right? What blockchain brings to that, though, the gold standard from our perspective of blockchain is multiple computers in multiple different jurisdictions, controlled by multiple different administrative organizations, all coming to consensus, all voting to determine what happened for the execution of a smart contract, right? So, Bitcoin is a smart contract, right? Lots of computers, with a consensus algorithm among them to vote as to which transactions happened versus which ones did not. And so what that does is it's not that enables smart contracts, it's that it provides this enormously high integrity substrate of execution that no human organization, government, etc., can, suborn or sneak their cut transactions in or operate, have substantial advantage over everyone else operating that environment. So now you can run smart contract businesses and smart contracts without having the trusted intermediary. Right, Uniswap, there's a group that administers it and can do various things from a upgrade and so forth point of view, but it's not that you submit your transactions to them and then they decide whether they want to take your transaction or someone else's. Right. It's all operating in on this decentralized platform that in theory, modulo MEV and that sort of thing has operates consistently the same for everybody.
I'm curious to know, what was your thinking process when you heard about Ethereum? Because I have a feeling that it was more like, holy smokes, finally we have something that works in the fashion that we always dreamed.
Well, so when we first envisioned smart contracts, it was really between independent servers operated by different people for their own purposes. So it was not consensus among a bunch of independent providers. It was, I'm running my business on my machine, you're running your business on your machine, my machine wants to buy something from your machine. So it's cryptographic protocols between those machines to be able to do a transaction. And so when Ethereum came along, that was, so the idea of smart contracts, were floating around then, and we built one, we deployed it, and then Nick Szabo came along, and one of the most important things Nick did is he articulated what we had done, right? So we did some of these smart contracts. We were Cypherpunks and a bunch of other people there, but he came along and said, here's what's unique about it. Here's what here's why that's special. Here's why we should do more of that. And gave it the name smart contract. Right? And but our model was still, sometimes autonomous smart contracts, sometimes hosted smart contracts, all cooperating. So when Ethereum came along with this consensus thing, there was a vast number of machines working really hard to have, the power of an old cell phone. And, for me, that was a head scratcher because I was working on, high frequency trading systems or high transaction systems or, and so here's something that it's 1,000,000 times slower than the systems I was working on, literally. And yet it was getting some legs. So it took me a while to absorb that this synergy was actually more powerful. I was looking at, then we look at it and go, oh God, they made some of the basic mistakes of, reentrancy and the wrong security model. And that's just going to be a nightmare. And it has in fact turned out to be, multi-billion dollars worth of nightmare, but still it's wonderful that they did this thing because you at least got to see what real decentralized execution could do.
So you were a skeptic.
Yes, but I personally was working in, I won't say centralized finance. We were doing an electronic payment instrument. The goal was to take paper checks and get them to be electronic, right? In the United States, there's still 20 billion paper checks every year for $30 trillion. That's a lot of money, and that's a lot of paper. And every other payment instrument, other than blockchain payment instruments, started life with paper, and checks were sort of the last bastion of requiring paper. And so we were getting rid of that. But that involved, when you're trying to revolutionize things in the shall we say, legacy financial system, man, it felt like we had to be squeaky clean. So I wasn't spending a lot of time on blockchain and Bitcoin and Ethereum because, I was sort of staying far enough away that I was, appeared much squeakier, cleaner than anyone, should be, right? Because we were disrupting this other payment industry. So I wasn't so much a skeptic as I was just far enough away that I had to be skeptical because I wasn't able to dig in.
What about the other cypherpunks from your entourage? They were, when Ethereum appeared, were they more, well, this is something that could have legs, or it was more like, well, another try, another fail?
Well, so really it was Bitcoin was the first decentralized smart contract. Yeah. Now, the big thing about Ethereum is it could run user-provided smart contracts instead, whereas Bitcoin is, software that's enforcing the terms of this payment arrangement, on multiple computers. So it was a smart contract, but it was a particular one. And so some of the people that we worked on, large-scale enterprise software systems with it at Sun Microsystem, for example, was one of the early miners and was heavily into it. Obviously, many of the crypto folks were into it. But the Cypherpunks world had kind of quieted down a lot by then. So, I was off doing this centralized finance thing. And so yes, there were definitely people into it, driving it. Nick Szabo, the other guy I used to work with a lot on PGP and other things. So, so there was excitement there. And so it's like, okay, I look forward to getting into this and taking a look once I surface from my current gig. and then it exploded all over the place. And then there was all these horrible security flaws all over the place. And so come 2017, right, it was both exploding and, in a positive way, right? And there were all these security breaches that, like our lead engineer, Brian Warner, had pointed out in the security review for Ethereum, hey, you've got reentrancy problems here. What are you going to do about it? And they said, it's fine. It'll be fine. And they're right. It's only cost, $8 billion or whatever the hell it is, right? 660 million was the last, reentrancy bug breach. Yeah. That was only a couple months ago. The next one will be bigger, So they were right. So friends of ours at Foresight, which, Foresight Institute, did a lot of early nanotechnology stuff. But what people don't know is it was at Foresight that the term open source was coined by Chris Peterson, that was then director of Foresight. So a lot of this cypherpunk stuff and a lot of smart contract stuff actually happened in, sort of discussions of it happened in the community around the Foresight Institute. So they set up a panel of that had Zuko, Brian, who I mentioned, Mark Miller, our chief scientist. So Zuko from Zcash, Jorge from Gravity, and Arthur Brightman from Tezos. And it was a panel on, does the security model that these, extended Agorics folk, the extended community, the object capability security model, would that model help with smart contracts on Ethereum? Right? Because we had done this smart contract work back at Sun Labs back in the 90s, where we had done, internal large-scale distributed system, control system, markets for buying and selling compute resources inside the company. And so it was like, would this stuff help with the kind of bugs that we're seeing now? And there was this wonderful sort of, coincidence that particular panel happened when Tezos's public sale happened. So from the beginning of the panel to the end of the panel, Arthur was right there talking, and you'd see him occasionally checking his phone or something, because from the beginning to the end, they were like worth another $20 million or some crazy thing, right? So that was really fun. It was like, put a whole, sort of enthusiastic, crazy vibe around it. But the net result of the panel was indeed the security stuff that we had done for lots of other, web and decentralized business stuff would in fact apply to smart contracts, and we should really look at that. And we looked really hard. And so Markham and Zuko and Naval and they pulled me in, we pulled Brian in, pulled Bill Tuller, our economist, in order to figure out what can we do there with all this technology that we've been working on in a bunch of different environments. So, and that was the start of Agoric.
Yeah, exactly. Moving to Agoric, in a Medium article from 2020, you wrote this: at Agoric, our goal is to leverage the decentralized network to bring the world's economy online. We do this by enabling developers to write safer, simple, smarter smart contracts so individuals can cooperate safely with anyone, anywhere. Zoe is the fruit of decades of our collective work in programming languages, security models, and economics. We're in 2022, and you've just had the public mainnet. How would you describe what you've accomplished in the last few years?
Okay, so first, let me clarify an important thing with respect to the public mainnet, and then I will answer that question. So that thank you for reading that quote. Just like, yep, we're still doing that mission. Okay, good. Always good to check that. It's easy to get led astray, especially in very frothy kinds of environments. So the mainnet we have working. So we're a layered system. We're building on the Cosmos's Tendermint. So Cosmos SDK with Tendermint as the proof of stake system. That's the battle tested system that's got, $200 billion in assets. So a tenth of the cryptoverse is running on Cosmos Tendermint in one chain or another. And so we're building on that. That's, that's sort of, I won't say commodity because it's hard and it's important and it keeps growing, but it's solved. And that's not something that needed more of our expertise solving. And then we're building the hardened JavaScript execution and Zoe layer, and then our smart contracts for doing stable tokens and other kinds of things. So what we shipped and have running is the Cosmos SDK consensus layer, is the what we refer to as mainnet 0, that it takes our build token. BLD is our staking token that you earned in the incentivized testnet. People bought when they invested in the company, all that kind of thing. So we now have that running in consensus, on 90 or so validators, with tokens distributed, and so forth. And we're, getting more and more stake to build up to launching the layers above that, in the next quarter, that have the hardened JavaScript smart contract environment and Zoe. So we are only partly there. And we will be doing staged rollouts of mainnet, where the first phase is the initial JavaScript smart contract platform. So all of this is running on our DevNet, right? So people can build and play with it and learn and develop and extend it and so forth. But the first, or mainnet 1, so mainnet 0 is what's running now. Mainnet 1 will be the smart contract platform with Zoe and all of its safety features that we can talk about. And then our key elements of market services for the future economy there. And so that will have the RUN token, RUN, which is the stable token. And that's, to my mind, developers trying to deploy a new decentralized business, you want to deploy an environment that has a native stable token. It's just the grease that makes commerce work, right? You can do the kind of Ethereum thing where if you think of gas as, rent or postage, it's like you're paying your rent or postage using Apple shares,
Yep.
or Apple shares for this and Google shares for that. And it kind of works. I mean, it works okay, but there's a reason why economies all developed currencies, stable tokens that they can use so you can tell whether your rent is the same this month or next month, right? Presumably, if you're saying paying the same amount of ETH for your rent this month as last month, your rent went down because the price of ETH went down, and the month before that it was higher, right? And so having prices that you can't tell whether it's changing over time turns out not to be good for, not to be as good for quickly rolling out and innovating businesses. And so that's a key element. So that's rolling out in mainnet 1. Mainnet 2 starts to open it up to third-party components and evolution, where that'll be the permissioned environment where the chain will vote on what additional core contracts to add, primarily focusing on market services so that the economy grows, but, core NFT minting contracts and stuff like that. And then finally, mainnet 3 is the version that's permissionless, where anyone can deploy any business and they can easily extend each other and all that sort of stuff.
What are the tentative deadlines for mainnet 1, 2, and 3?
Oh, sure. Yeah, I'm going to say that. So mainnet 2 is the easiest. Mainnet 2 is between mainnet 1 and mainnet 3. I can give you that for free.
That's good.
Okay. Our target is mainnet 1, in the next quarter. Q1, very early Q2. We just brought on a awesome head of development, or head of engineering, and he's gotten up to speed fabulously. We've got getting some nice architecture diagrams so everyone can see how all the pieces work together and all that sort of stuff. He'll come back to me with a date. We'll see what that date is. But our mainnet 3 is gated somewhat by additional features and largely by a bunch more security reviews. We're going through a whole bunch of security reviews and audits and purple team exercises and all that sort of stuff for different layers of the system. And the security bar you have to meet when it's running all our code, trusted code, verified code, reviewed code, rather than it's running third-party code that's running on system that can attack stuff and try to steal money. Those are just different bars. So the same security review will produce some issues that we have to address now, some we must address before mainnet 3. And so it's just going to be a question of finishing all those features. I would be delighted if we can get it in Q4 this year. That's kind of my aspiration.
Okay, so we will have a brilliant year for Agoric. You worked with a variety of people from the crypto space, but you chose Cosmos. Why is that? And what is, you partially covered that, but if you can go a little more deep into the relationship you have with the Cosmos ecosystem.
Sure. So we worked, we talked to Vitalik, we talked to Arthur, we talked to, Gavin, we talked to, all these different folks. And, part of the reason we talked to a lot of these different technology stacks is, some of them have interesting ideas that descend from our earlier work. But more generally, our target is getting this out to mainstream. It's not, scrabbling over some slice of the DeFi pie. It's about making the DeFi pie 100 times larger, right? And so we want to, and it's going to take everyone in the crypto ecosystem to get there, right? All of us have a lot of opportunity as we start getting connected to more and more mainstream use cases. And so, we're happy to work and collaborate with a bunch of these different projects. Originally, we were looking at using other technology stacks, looking at the smart contract layer to be potentially a layer 2 on some other platforms and those kinds of things. And that just didn't work out because the requirements for running hardened JavaScript smart contracts, for example, you need an account model. So proof of work doesn't work, right? Proof of work is fine if you're working in a box, right? Where your future history, I can have 2 future histories and then eventually decide which one I want to take and roll back. And Vitalik was recently talking about, L2s don't work because if we do rollback, then the L2s won't follow along and you can't get Atomistic. And it's just like, it's not because L2s are a bad idea. It's because rollback is a bad idea. That's just fine for, spinning fantasy worlds about how the transactions work and then deciding that one is kind of, voting on that and converging on one eventually. But if I have to ship the medicine on an airplane that is just left, rollback doesn't let you take the medicine back, right? So if you're going to interface to the real world, rollback is not an option. You've got to decide. Now, the brilliance of Bitcoin, where it came up with this proof of work thing, no question that's hugely valuable. And it's valuable, especially for financial things where, again, you can roll back that whole future history or switch between multiples and live in a superposition of multiple future states. That doesn't work when you interface to the real world, and many real world use cases resolve to have to interface to physical systems, delivery systems, payroll systems, whatever it is. So we wanted an account model, and so we looked at Polkadot, we looked at various others, and we were doing a lot of work with Polkadot. There's some really good tech there, but we ran into some technical challenges. We had a lot to do with early WASM stuff, and we were working with them on integrating WASM, and we were building our stuff to have a JavaScript engine that ran on WASM and that kind of thing. But it was just challenging to get our model to work with their model. And the whole point of building Agoric was to have this safer, better, more composable model. And so that was a challenge. We finally met up with the Cosmos folk. And it was like we found our people.
When was that?
We met them at ZCon 0, and I talked to Zucky then, and he was just like, I'm busy releasing Cosmos. Let's talk when that's over. And, I thought that was a polite blow off, right? But he was very, very sincere and very nice, right? So come 2019, like January, he calls up and says, okay, I'm done. I really want to talk to you guys. And he came, and he and Tony Arcieri and someone else, I don't remember who else, showed up and to ask what we were doing, and we're describing our stuff, and it's just like, and Zucker was like, yes, it's exactly what I was hoping for. We need to work together, right? And the reason I only found out like a year later is Cosmos IBC, Inter-Blockchain Communication Protocol, had been deeply inspired by our earlier work in the 90s. So where I said that we had, our model was independent services communicating over cryptographic protocols with each other. We were already at Agoric generalizing that to, a blockchain is just a computer made out of agreement rather than silicon. So you get, 100 computers to agree, and now that's, Gaia, and you get 100 computers to agree, and now that's osmosis. And then they talk cryptographic protocols, et cetera. And so the interchain was inspired by that model of these independent chains using those kind of protocols to talk to each other, to have evolving cross-chain use cases. And so that's what Agoric was built, was designed from the ground up to do. So when he came and talked to us, Cosmos did not have IBC. They were kind of working on it. They knew they needed to have it. That was the design for it, but it was all independent zones. And when we talked through, well, here's how we're doing, and it's just like, it rang the bells. They he had been inspired. He had discovered this website, a year and a half or whatever before, and came in and told Jay and Ethan, hey, here's our solution to the problem. Here's what we'll need to do generally. And here's a small part we can just get started with now, and that'll be our early IBC. So, fast forward, come the first, whatever it is, Cosmos Conversations, Interchain Conversations in Berlin, we brought together the whole Agoric team. We brought the whole Agoric team out. We brought all of the what is now Interchain Berlin team out, but the Tendermint and et cetera folk out, and walked through our requirements for our protocol and what we were already building, and their requirements and what they were already building, to figure out whether they matched. And and it was just a match made in heaven. It was one of those things where our core philosophy is the same, which is multiple independent, sovereign individuals, companies, organizations, or chains, all cooperating voluntarily, right? It's not the parachain model where you follow our rules and then you may come in and you must pay us to be in our rule. It was nope, I can launch this. I don't need you. I can use your tech, but there's synergy if the two of us connect. Let's make that happen, right? And so it's philosophically, that's what I mean by we met our peeps. But it was also technically, that vision of this interchain stuff. Well, they had all the best practices for how do you do interop between chains, and we had all the best practices for how do you reason about large scale asynchronous systems with multiple different independent parties, and you really need both of those. And so IBC incorporates all the insights from both of those, and that's a big part of the reason why why it was hard, why it took a lot of reviewers, and why once it got out there, it's just an enormous change in what's possible in the world of blockchain. That people are starting to realize that, seeing zones in Cosmos launch connected to to a couple $100 billion of assets. Well, I guess the interchain ecosystem is now $75 billion. So they launched connected to $75 billion in assets, as opposed to launching in isolation saying, I've got liquidity, come play here. It's like, no. It's like, when Osmosis launched and they did sort of the IBC go-to-market, they were getting, the first week they were already getting $10 million a day in additional liquidity flowing in over IBC from other chains. And it's just grown since then.
In a recent discussion at Foresight Institute, you said 2 years ago, people said interoperability is crazy and composability was that. And now everyone tries to claim they got the most composability and everything is well connected and their bridge is better than the other bridge and they have more value locked and so on. Do you feel that the levels of entitlement from this industry are starting to increase in direct proportion to the popularity of blockchain and crypto?
Well, what do you mean entitlement in there?
As in, I have a feeling that everyone, no matter if his work is big or small, important or less important, tries to speak louder about what they are doing, what they will do. They were the first to invent anything in this industry, and this being the reason why they deserve to have all the users in the world, all the scaling
Right.
in the world, and everyone should speak very kind about their work and so on and so forth.
So starting a company is hard. Software would not be where it is unless all of us were over optimistic,
Sure.
entitled, engineers, right? Because starting a company, persevering through winters, taking on challenges is hard. So there's certainly people that are scammers that go, oh, you should give me all the money because I did this tiny little thing. But part of the challenge is humans have this, I don't know, it must be hardwired given how pervasive it is, but very much a zero-sum model. And this actually came from Eric Drexler, the other author on the Agoric Open Systems papers back in the '88. An additive model where if I'm the engineer and created this thing, then I produced all the value. Whereas you're the sales guy and you sold this thing. If you didn't do the sale, the company got nothing. So you produced all the value, right? And so each of us thinks we're responsible for, well, okay, I'll give you some credit. I'm 90% of the value, you're 10, and you're thinking you're 90% of the value and I'm 10 because, you could have sold anything. So my stuff wasn't interesting. It was because of your sale that it happened. And that model of if you're 90%, I must be 10 is that additive model where it can only add up to 100%. Now you have 5 groups and everyone thinks that they're the biggest piece. And that's one of the standard ways that companies get problems. The interesting thing is to try and change your model to where it's multiplicative, right? So, I'm 1,000 of the value and you're 1,000 of the value, we put it together and we get 1,000,000, right? If we add more layer, if they go to 0, if anyone along that path where I'm multiplying X times Y times Z, if any of those are 0, the answer is 0. And it doesn't matter how big your number is. And so even if I'm, I think I'm all the value, I sure as heck want you to be at least 1 in order for what we're doing together to make any difference at all. And the same is true of interoperation between companies. Ideally, I've always been in tech, and that's pretty much almost always a growing market. And so while there's always going to be competition on key things, it's a lot more important to cooperate to grow the pie from my perspective, that's always where I want to be, is the growing the pie, is producing more value rather than fighting over existing value. Because that just, that's how we get the better world that I want to live in. And so, I'm not going to compete. I'm not interested in competing with Polkadot. I'm interested in interoperating with them so that our assets can be sold to their customers and vice versa.
Agoric has two tokens, BLD and RUN. Can you please describe BLD's utility and the pretty scarce tokenomics?
Absolutely. So, BLD is the staking token. So, like the Cosmos Atom, you use it for staking to provide proof of stake security. And it's at risk if one of the validators, like yourself, misbehaves, right? And then it is used for governance and as a core asset that you can risk in other purposes, like supporting RUN or other protocols. So that's pretty familiar to folks in the Cosmos ecosystem, which was really the place where proof of stake first took off. RUN is implemented in smart contracts built in hardened JavaScript. And it is the fee token in the environment, right? So it is the thing that smart contracts spend to pay for gas, to pay for names, to pay for IBC, and ideally to pay for each other's services, right? So, and from our perspective, right, we've had an economist on staff from the beginning. We work with economists advising us how do you make key institutions so that the market can grow and all that sort of thing. And from our perspective, having it be stable, having it have a stable value is useful, makes it a better fee token to grease the economy. And one of the reasons it is separate from build is because the token, the token that you want to pay each other, the token that you want to store value in or pay for gas fees, should not be speculative, because then you're competing with, am I using it as something I'm investing in, or am I paying gas? And that's been a continuing source of problem and challenge and misalignment around MEV and a whole bunch of things in Ethereum that are kind of intrinsic to its architecture and make for friction in the gears of growth and friction in the gears of commerce. And so we want it to not go up in value. But we also don't want it to go down in value. Otherwise, you can't have long-lived contracts that are priced in terms of that asset. So you don't see very many long-lived contracts like mortgages, or insurance contracts on Ethereum, because there isn't that stable pricing mechanism to let you have something that would run for 5 years or 10 years. And, much of the economy is, the outer economy is tied up in that. We want to make sure those kinds of contracts are possible. So we don't want it to go up. We don't want it to go down. We want it to be stable. Okay. Does it have to be, as long as it's stable-ish, that's good enough to make the economy work better. But from an accounting point of view, it's better if it's tied to the dollar, simply because lots and lots of businesses already know how to manage dollar-priced things. They can compare: do I rent a conference room, or do I buy more teleconferencing? Do I fly out to the conference, or do I project from there? Do I rent a car, or do I Uber? All of those I can compare because they're all in the same pricing, in the same medium of exchange, the same unit of value, and so. Being able to, do I pay with a wire or do I transfer it over blockchain? They're in the same unit of value. That makes it easy. Okay. But RUN will be launched by the community, right? That's, Agoric has built multiple different things, some of which make sense to work together, some of which don't, right? And that's because it's intended to be educational and be able to talk about different variants and talk about parameterization and all that sort of stuff. But it will be the extended community. Our original focus was on Agoric community to decide what types of collateral to for example, support in the RUN vaults that you can bring over Atom, for example, and then borrow RUN against it, like MakerDAO, only much more built into the Agoric infrastructure and tied to IBC. So that ball got rolling. That's what we've always intended to do. But last year, especially in Lisbon, we were presenting this and talking about it, and Sonny Agarwal of Sika and Osmosis, he had the, oh my God, we so need, his reaction was, oh my God, we so need an atom-backed stablecoin. Oh my God, thank you. Right? It's like, no. Our focus here is grease for the wheels of commerce on our chain. It's like, no, but we can use this, right? Everyone needs this, right? And everyone around the room is going, oh yeah, we need this, bring it. Right? So the excitement around the RUN protocol and the interest, it's not, it was always intended to be the community managed thing because it's currency only works because people care, right? It's not you can't inflict it on someone, or stable token only works for that. And so having it be, and because of IBC, right now IBC is a $75 billion inter-blockchain communication ecosystem, is $75 billion in assets, and there is no asset-backed stable token, right? You can't borrow a stable token against RUN. You can get Luna and then sell it for USD, but that's not the same thing. It doesn't have the same stability properties that people want to rely on. It's less conservative, shall we say? And it's been great that we have that, but it's not the same thing. And any one platform saying, and you can only back it with our token, that's not the same thing either. Part of the thing about the interchain and part of the thing about growing into this large, lots of independent collaborating parties is enabling something where, someone can bring along a new chain, grow it, and then, that they can participate in that RUN ecosystem as well. So that's the goal, is we're using it intrinsically. We pay fees in it. Rewards for minting it flow to all of the build stakers through the process of the economy. And that helps drive the value of the build platform to be high enough to support the, you got to have the economic value of your staking token grow with the services it provides, or you end up losing the economic security that proof of stake relies on. So all of those properties are true, but the thing that's most exciting to me is that it's a community stable token that multiple assets from multiple chains will be able to participate in. And the better we can get it integrated with things like Kepler and all of the IBC infrastructure, on Osmosis, on Injective, on Akash, in Gaia Hub, usable in the exchanges, all that sort of stuff. The easier commerce will be for a lot of people.
You had multiple rounds and you managed to attract some big names from Metastable, Navals, and through Polychain. And I was wondering, what was the trigger for having all those guys fall in love with you?
So we have an awesome team, a very deep engineering bench, so the hardest thing to scale is the programmer base. At the end of the day, the hardest thing to scale in crypto is the programming base. Scaling performance, that's just engineering, and we've scaled lots and lots of systems in lots of different dimensions. There are a gazillion startups. No, there's a handful of important startups, but there's multiple. I like Chris Berniski actually said this. Just like we understand, we've seen lots and lots of startups scaling for scaling performance, scaling transaction rates, whatever. And some of them, some of them are more marketing than tech. But some of them are real interesting tech, and some of them are complementary with each other, and some compete and all that sort of stuff. But fundamentally, engineers look at a problem and they think of an engineering solution and they go, I can make that better. And they start this. But scaling the number of programmers is hard, right? And the fundamental flaws in Ethereum, which we could articulate to people like reentrancy and the security model, those aren't solvable. And it's just getting worse as people clone EVM to multiple different environments, right? The innovation of cloning EVM to a different environment does not excite me. I mean, yes, it will be monetarily valuable, and we're and that sort of thing, but it's not important innovation like the ZK rollups or the Mina or what we're doing. And so the big thing that we're doing with hardened JavaScript is it's a model. First off, it's a language that the last thing I saw was 13.9 million developers know. 80% of the developers on the planet already know JavaScript. And that means that I can take the 650 lines. There was some security issue in open put for Ethereum back a year or so ago. And we looked at it, it's like, 650 lines of Ethereum. What would this look like in Java? Oh, we have one already like that. It's about 40 lines of JavaScript that I can explain to someone who's had 3 months of training. Okay. To make it production, we might have to double it to 80 lines of JavaScript versus 650 lines of Ethereum, right? Is everything going to be that efficient? maybe, we'll see, right? But it's one of those things where the fact that I can explain it to someone early in their career and they can get it is amazing. And it follows sort of the modern bar, the modern approach that application developers expect that comes from React or Node, where I can grab components built by other people and plug them together with a framework that understands what I'm doing and helps me with it, as opposed to just, here's a language, knock yourself out, right? And so that is the thing that gives the platform legs, and that is the thing that gets people excited. So since then, Run Protocol has gotten a lot of people excited, as our first use case of our platform. And it's not just that they desperately need, not desperately, that's the wrong term, but that there's a big gap in the extended interchain and Cosmos ecosystem of having a community-backed stable token. But having it built on Agoric means that it is extensible and can adapt and grow over time, unlike what you would expect in other systems. So we'll start with simple vaults like MakerDAO, high over collateralization to make sure you can take loans against and all that sort of stuff. But we know exactly where to put hooks so that if a market in perps grew, like what Injective's building or Open or any of those came over, Vega, whatever, and could plug in, now suddenly I could, take, $105 worth of Atom and an insurance contract that would pay off my debt if Atom falls by 5%, right? Or 110 and this corresponding thing. And instead of $200 worth of Atom, and I borrow, $100 against it. Now you get capital efficiency, not because we're playing funky games, but just because you've made a more sophisticated ecosystem that has more instruments that remain reliable, strong, conservative instruments, but can compose together to give you better capital efficiency and more interesting DeFi opportunities. And so those are all elements that because of the composability, even Run Protocol starts to drive a programmable environment as a more powerful environment.
I've seen the report from Electric Capital and on the devs who are joining crypto projects, and I remember there were like 2,000-3,000 a month. And I'm curious to know, is this number high? Is it low? How do we interpret that?
When was that report?
It was for 2021.
Okay.
There were like, it was like a peak of 3,000 developers a month coming into the whole industry.
Right. Mm-hmm. And because of interop, and this is one, there are some issues with Solana's technology, right? They're like in the database wars when you're talking perf, they from my perspective, were frankly dishonest about their transaction rates, because they made the beginner's mistake of including the control signals for consensus in the set of transactions. So they pretend it's 80,000 a second or whatever, of which 65,000 a second are just to even work. And when they ended up having any kind of interest at all, the interest, the things that people are paying for, squeezed out the consensus, and suddenly the chain halted for 17 hours because they were so interested in getting a bid on that NFT that they would not finish the consensus process, and so they couldn't vote on a block. That's just that's either amateur hour at the software factory or just dishonest reporting about what your transaction rates are. But the thing that they did is they really broke open the myth that everything was going to happen on Ethereum, right? There up until 2021, it's like Ethereum is everything. Layer 2 will be nice, but all this other stuff out there, it's just the monkeys. It's just the little boys. It's not real. And that ship has sailed now, right? That got fixed last year with and the layer 2s and Solana and Cosmos getting IBC together. All of those just crack that myth. And that genie's out of the bottle, whatever analogy you want to use. But that's a really important transition for the industry to have done. And that goes back to that interoperability comment from earlier, that before that, people, interoperability is nice for all you little guys, but the real stuff is happening over here on Ethereum, and that's now gone, right? The real stuff is happening because multiple independent projects that are expert at one thing, but not the best at everything, can interoperate with people that are better at something else. And that's what makes an economy work. One platform is not an economy. It's lots of people independently doing lots of things, voluntarily cooperating, that makes an economy. Okay. So, but nonetheless, it really did look like, and I'd be interested in the numbers, where there was a non-trivial tapering off, flattening of the curve of adoption because of the difficulty of picking up these new systems, right? My previous gig was this multi-billion-dollar payment instrument. I had lots of people, worked with lots of people that were fintech engineers, fintech conferences, all that sort of stuff. Many of whom had looked at blockchain, looked at Ethereum, looked at Solidity, and just like, okay, that's a lot of work to learn. I can already go program in the tool set I already have for my buddy at a hedge fund, so I'm going to go do that, right? And the idea of innovation, there's still a bar you had to meet for this to be usable for those guys, and they got plenty of opportunities in front of them. Why are they going to go over to blockchain, right? Well, now there's lots and lots of froth to be able to attract people, but there's still a lot of the senior people that look at it and go, call me when you're grown up, or maybe not grown up, but at least, credible tools. Come on. And so my impression is that the adoption is much slower than it could be with better tools. It's also, so it's still, the number of developers, you talk about, well, we're going to do smart contracts. It'll be wonderful. We'll free ourselves from all this centralized stuff. There are probably more lawyers in New York than there are, EVM developers, right? So, or, ETH developers. And so you're just trading one priesthood for another. That's not great. They charge almost as much, right? And so that, going back to that original quote, the whole thing is, what does it take to enable so that most of the developers in the world, anyone who can build a Web 2 application could build a Web 3 application. And that means meeting them where they're at. There's always going to be people that will, as someone said, Solidity is the glass you eat in order to get over to be able to do DeFi. It's not a thing people want to do. It's a thing they just, had to do. Well, now they can do other things with, Polkadot and Cosmos and Solana and so forth. But the thing they already know is JavaScript. And the thing they already know is interesting composable frameworks in JavaScript, even if they know Rust, they probably also know JavaScript, right? So it's, so if we're going to get millions of developers there and ramp that rate of adoption up, it's got to be by reaching a whole new class of developers.
Speaking of which, tell us more about Blue Lava and the other initiatives that you guys have to convince Web 2 developers to join the Web 3 revolution.
Yeah, exactly. So Blue Lava is a conference series, I think, that's being started by Jeff Pulver, who's done, in Web 2 previous series, has done several very successful educational conference series and programs. So Agoric is sponsoring it, but it's not an Agoric thing. But Blue Lava is fundamentally decentralized web for JavaScript programmers, right? Our contention at Agoric, or my expectation is that, JavaScript programmers are going to be the heroes of the next generation of decentralized applications and blockchain. In large part because of our technology, but turns out they're desperately needed across the entire surface of this thing, right? Wallets, from, Kepler to MetaMask and so forth, they're built in JavaScript. They're not built in anything else. They're built in JavaScript. And what you want is all of the world's developers that already know how to do UX, they know their customers, they know what they want, they know how to do user testing, they know all those sorts of stuff. You want them building the tools so that more mainstream users can come in and it doesn't look like, amateur hour at the software factory when they're looking at these applications, right? And so there's already a big window, a big area where fintech developers, Web 2 developers, that are experts in various different areas, game developers, engagement developers, they're already innovating in all the things that we care about in the Web 2 space, right? They're already innovating in how bands will engage their fans, how sports teams will engage their fans, how airlines will engage people that, that use airline miles. All of that innovation, most of it happens in JavaScript, right? Because most of it's on some website somewhere. And so, our model is those people, even if Agoric didn't come along, we want them all building and thinking and aware of what they could add value to this very, very exciting, exponentially growing industry. The fact that for us, that means that they also could build the applications. So if you're innovating in engagement for bands, and now you can build these, and innovate in the NFT that's going to run on a smart contract tied together with your really awesome UI and spectacular light show control at the concerts, right? All that stuff we want to empower them to do. But so Blue Lava is just all about starting to make those bridges, starting to make that education happen. And, we'll be working with them. We'll be working with other folks to sponsor additional activities or drive additional activities at some of these major, just standard developer conferences, right? Developer conferences that happen all over in the JavaScript space, many of which are just larger than the crypto space altogether, right?
Before going to my last question, I'm curious to know what you think about the regulation in the US. And we've heard politicians from Elizabeth Warren to, I don't know, to all those to Gensler from the SEC using different kind of weird wording about blockchain and crypto industry and the people from this industry. I'm curious, how do you see the future regulation in the US, and how is the relationship between the industry and why is the relationship between the industry and the regulators so bumpy?
So I'm not going to say a lot about that. Oh, actually, I'm going to add one more thing to the Blue Lava thing. The first Blue Lava conference is beginning of February, so go check out bluelava.live. So it's coming up. If you're a JavaScript developer, or if you know a JavaScript developer, right. Friends don't let friends program in Solidity. No, wait. Okay, so with respect to regulation, so one of the things that when we were getting into this, and part of the reason why I started this conversation, and I'm really glad you asked about what was a smart contract then, and and I could talk about and the relation with blockchain is, we for a month or so, all of us, every time we said blockchain, you had to use jazz hands, right? And because it'll have blockchain, and it's sort of it was the magic secret sauce that enterprises would pour onto their applications, and they would somehow be better, right? And we see that happen in hype cycles all the time. Now with hype, metaverse, right? That's the current. It's anything I want it to be in order to sprinkle some magic metaverse dust on whatever product I was already selling. And so we started working, early on in Agoric. We were talking to the stock exchanges and Fidelity and BlackRock and all these kinds of folks about enterprise blockchain stuff and our technology stack, and they're very excited about it. But then we realized, no, we want to go the centralized route, like JavaScript. JavaScript took over the world because individual developers said, I can do stuff with this. I'm just going to pick it up and I'm going to do something awesome, and they did. Right? And so we're in the same. We're following the same path, but they were all very confused about what blockchain did for anybody, right? And that's why I really focus on the multiple machines in different jurisdictions and administrative regimes so that no one's in a position, right? So if your use case does not leverage that, it's probably not a blockchain use case, right? If it does not leverage, and I explained how, even in a private chain, like index data, where they report, here's what these funds are and here's what the stocks are and why the prices change and all that. And like a stock exchange that's doing that, if they send the wrong index data, they are financially liable for the negative results of trading activity by the people they provided the index data to. So if you have a disgruntled employee inside that wants to slip in, Apple price is 20% off and now suddenly they're sell, that would be bad. It would be better for them if they had multiple data centers in different jurisdictions with different people controlling them, internally voting to agree on what price am I sending for the price of Apple tomorrow, right? And so that model, if you're not taking advantage of that, you're leaving something on the table and you're replacing it with hype, right? And so politicians are even farther removed from that and even harder to understand what actually the value is. And to a first approximation, they kind of don't care. They kind of care about, they're always going to focus more on the negative downsides than they are on the value prop. Unless you can really make it clear where this is a win and how it's a win for the community. The biggest issue from my perspective around regulatory stuff, and Agoric does a lot of work to make sure we are very aligned with U.S. regulatory policy because there's a lot of JavaScript developers in the U.S. We would like to not abandon them. But currently the regulatory framework has been such that almost every other project says, screw this, I'm out of here, because the US regulatory framework is terrible. We put a lot of investment into being compatible with US, and they're working very hard to make it not having been rewarding, right? We're spending an enormous amount on legal effort, and as far as I can tell, it's not doing us much good. Moving somewhere else, is something we have to seriously entertain. And so you're going to get offshoring, where one of the number one innovation areas is moving entirely offshore because of how bad the regulatory situation is in the US. And that kind of brain drain has a long-term negative impact on an economy, on an environment, et cetera. And so I hope they get their act together in a positive and supportive way. And there are certainly people working on that. There are certainly people that are driving some of the right kinds of initiatives. And we all want something that's that is reasonable, so that we can do this kind of innovation in the US safely, and for the rest of the world as well. Obviously, our public sale was entirely outside of the US. Much of our private sale was to Asia, Europe, etc. The goal of our platform is international support. But we'd like to include the US. That'd be good, because we live here.
Okay, so my last question is something that I'm asking everyone who joins me for the podcast. But after this discussion, I'm extra curious about your answer, I swear. So let's imagine it's 2009 and you are Satoshi, but you know everything that we learned in the meantime. What would you do differently to change the course of history?
Well, I would have worked on the general smart contract problem sooner. I don't have, so part of the reason I did not get into Bitcoin early, Dean did not get into Bitcoin early, was Mt. Gox. Right. If you're familiar with Mt. Gox.
Yeah, absolutely.
It was a gaming platform. And so most of the software I would look at and go, I'm working on financial industry stuff where we take seriously protecting people's money. And now you've got this fly-by-net crap software that people are claiming is the next best thing. To me, that was an utter turnoff to the overall platform, and part of the reason I didn't get into blockchain. And I know though people's like, not in GMI, right? I should have seen through all. Just like no. I've been in professional software at that point for still decades at that point, and you look at that and you go, it's just hard to take seriously something that is so bad, and all the things that people were excited about. I mean, we had done cryptocurrency, we had done cyber cash, and what people were excited about, Bitcoin, they were just all wrong, right? It's not anonymous high frequency transactions that we can do, on the side. It's entirely deeply audited forever. Much worse than cash, much worse than checks, much worse than bank accounts and credit cards. It is slow. You sure can't do a payment with this in a shopping line, right? And so all the things they were claiming about it, they were just utterly confused. So when you combine specious claims about how wonderful it is that were simply wrong with terrible software, that really impeded my adoption as someone who had some expertise in this space. And I think it was, we retained some hangover from how bad that was going forward. Now, maybe as a result, it ended up recruiting a bunch of, the next generation of edgy cypherpunks, and they knew something more than you did. And, back to that arrogance thing, a lot of this stuff is driven by people who are sure they're smarter than you. They're not, but it gets them going, right? And it gets them building stuff, and the name of the game is getting stuff built, right? The mantra was Cypherpunks build code, right? And so if that gets them building code, more power to them. But I personally would have wanted to do a better job at that, and then get into general purpose programmable stuff sooner. Now, it's easy to want to do more and differently. And then you go, oh, well, you were trying to do it better. And as a result, you shipped 3 months later and you did not get the traction. And so, who knows how many innovations haven't happened because someone didn't roll out slapdash crap. Now, Bitcoin itself, that code was not slapdash crap. That was just brilliant. But all the rest of the stuff around it, a lot of it was moving too quickly for safety. But people flew by the seat of their pants, and we got lucky. It is as plausible to me that would have fallen apart more quickly. So thankfully there were continuing people to support, and it kind of got us through that worst part of the technical disaster there. But I don't know if I don't know how good an answer to your question is, but
yeah, you did absolutely. So Dean, that was it. Thank you very much for accepting to come at our podcast. I hope it was interesting for you. It was definitely fun and interesting for me. So good luck in everything that you do. You have a very long and hard year ahead, and wish you all the best.
Thank you very much. Thank you for being part of the Incentivized Testnet, and look forward to seeing you on Mainnet.
You bet. Cheers.